about so many things. That is certainly something that we're keeping our eye on. But if you notice, like the stocks that warned, pre-warned have kind of come back. They sold off initially and they've come back. So I think the market is expecting earnings to be kind of disappointing, lackluster. We're focused on China and growth, and we think we're starting to see resurging growth. So we've moved our portfolios away from defensive names and more towards the cyclical plays.
Which has been the part of the market doing really well in the first quarter, especially. I also saw in here, you like the U.S. consumer.
Yeah, we do. But some of the defensive names have done really well, so like utilities, and we've been out of those. But yeah, we think the consumer is, even despite the recent numbers, we think the consumer is going to resurge again. Also in the second quarter, though, we think China's second half. So we loaded up on some of the consumer discretionary names in December. I caution retail investors away from these because these stocks have incubated as unicorns for so long. A lot of the easy money has already been made, unless you're willing to flip it. And I don't think the average retail investor, nor am I, by the way, very good at that.
What do you think about the pipeline of some of the other names? Airbnb, Pinterest, for example, might have a balance sheet that looks a little more attractive to investors here. Or like you said a moment ago, do you just say across the board, be careful, like Warren Buffett said last week?
I do think you have to be careful, but I think you want, if you have an opportunity to buy the number one in a commodity business like Uber over Lyft, that would be my bias all day long, is to go for quality. So some of them might be interesting, depends on pricing.
And Leslie, going back to what you said about the people who had it for the IPO, especially because they're being watched in terms of their participation in the next deals, what is that likely to mean in terms of pricing and interest, and even the way these things are going to open, or does it not tell us that much?
I think it could mean that, you know, one of the key important factors of this IPO is exactly when it started trading. So the actual holders of this deal, who flipped, who held, all of those disclosures won't come until much later. And the reason is it was the last trading day of the first quarter. So the 13F filings, which will show who got allocation and who traded in and out of it, won't come for another, I guess it would be almost 4 months at this point. So that actually won't impact their allocation for Uber or Pinterest or anything like that, because those deals are expected, at least according to sources we've talked with, to come within that window. So it's kind of easy if you're a big institutional investor to trade out of this deal and not worry about the blowback, because no one's really going to know about it.
Well, there you go. Okay.